the small cap signal has inverted. Russell 2000 is outpacing the S&P 500 for the first time in months, as capital quietly rotates away from large-cap tech dominance. A strategist warning of major risk for the S&P 500 arrives just as gold surges 3.61% and the VIX flatlines at near-panic lows despite sector weakness. The question is whether this is defensive positioning or capitulation. Speculative energy is running hot but selectively. ARKK gained 5.36%, while SMH, the semiconductor engine, coughed 1.07%. This disconnect suggests capital is hunting for alpha outside of traditional tech megacap plays. Our data confirms the rotation. XBI surged 5.95%, indicating biotech and small-cap speculative names are attracting fresh attention as investors seek exposure to innovation without large-cap concentration risk. The consensus among the Canary community is that greed has shifted from broad-based enthusiasm to surgical precision. Every dollar deployed requires justification beyond momentum alone. The engine sector shows bifurcation. IWM gained 0.51% while CRA retreated 2.36%. Industrial exposure remains vulnerable, as equipment orders lag GDP growth and commercial real estate stress continues to compound. Our metrics confirm the divergence. Small-cap industrials are benefiting from relative value positioning, but mega-cap industrial names face margin compression from input costs. The pulse check indicates credit conditions remain manageable. TLT climbed 1.63%, while high remained steady at 21.75, suggesting institutional buyers see intermediate duration bonds as a tactical hedge rather than flight to safety. Fear has flatlined, UVXY dropped 4.86%, VIXY 3.28%, and the VIX itself shed 6% despite mixed sector performance. This physiological anomaly signals investors are pricing instability while maintaining defensive posture. The indicators confirm we're not seeing classic panic selling. Capital is rotating, not fleeing. However, the 30-year Treasury hitting its highest level since 2007 suggests long-dated fear remains elevated. Our dashboard shows fear is compartmentalized, short-term volatility is contained, but duration risk continues to build as deficits collide with persistent AI-driven spending pressures. Small-cap outperformance at plus 0.5% versus the S&P 500's plus 0.21% indicates underlying economic resilience in non-megacap sectors. The Russell 2000 signal aligns with manufacturing recovery and regional bank stability. Traditional engines that have been dormant since late 2024. Our metrics confirm this is not a cyclical rebound but structural. Equal-weighted exposure has been underperforming, suggesting the market is revaluing companies beyond headline-making tech titans. The real economy is waking up from the AI winter narrative. Earnings are stabilizing, even as headlines remain fixated on capital expenditure concerns. Gold's 3.61% surge to 4,580 represents a significant physiological response to uncertainty, not necessarily crisis level, but enough to trigger safe haven rotation. GLD gained 4.12%, while TLT climbed 1.63%, creating a classic flight quality pattern that typically precedes elevated volatility windows. Our data indicates safety assets are being treated as tactical hedges rather than permanent repositions. This is evidenced by UVXY's sharp decline, which suggests traders expect stability to return quickly. The safety trade has evolved. Investors want protection without sacrificing upside potential entirely. The portfolio, hero, faces a bifurcated threat landscape. Technical volatility is contained, but duration and sector concentration risks are building like fever after recovery. Small-cap outperformance signals the market is healing selectively. Biotech and industrials leading while mega-cap tech coughs through semiconductor weakness. The VIX flatline combined with gold's surge creates what our Canary metrics call a recovery fever pattern. Stability returns but underlying inflammation persists. Capital is rotating towards surgical precision rather than broad-based bets, suggesting the hero requires targeted treatment, not systemic overhaul. The verdict: defensive positioning without capitulation. Capital is hunting for alpha outside traditional tech megacaps, while maintaining safety buffers through gold and duration exposure. Watch the 30-year Treasury as the primary warning signal. If it breaks above 4.8%, the recovery fever could escalate into full-blown inflammation. The Canary Report's back. Small caps are singing, but listen for the rhythm. This is not a new song, only a different key.